What's going on, everyone? Happy Sunday. Welcome back. Make sure the audio is good on my end. What's going on, everyone? Happy Sunday. Alrighty, we should be good to go. Hope you guys are doing well. Appreciate you joining us here this lovely Sunday. I'm going to look to keep this one short and sweet, get to my analysis, what I'm looking at, support it with intermarket analysis as usual, give you guys the business and keep it moving forward. Today's my lady's birthday, so I will be using the rest of the day and the rest of the long weekend to enjoy that. So with that in mind, we're going to go ahead and get things sorted out here. What I'm looking at, take a few of your guys' lovely questions. Would want to get to them all, but probably not going to be able to do that here on this one. I know we didn't do a weekly outlook last week. Had my man Tommy give you guys the analysis in our free Discord so that you guys can still know what we were looking for, even though I wasn't available last Sunday. However, here, going forward throughout the rest of the year, we will be here every single Sunday. So you can set your alarm clock to it. It will be consistent. I will be having the PowerPoint presentation style so I can keep it clear, concise, direct, and also give you guys some insight, give you guys some teaching points at the same time, right? You guys know my style. I don't just like to call targets. I could do that, make my job easier. However, I do want you guys to understand the why behind why we're looking at these things, right? Which is why I do sometimes take a little extra time to articulate what I'm looking at and, more importantly, why I'm looking for those factors, right? Because it is consistent and it is something you guys want to learn, and I'm here to help you guys do that, right? So 2025, we're about 3 weeks into January, 3 weeks into the new year, and this year is going to be filled with opportunity. This is the year to lock the fuck in, take this serious, and make this a real income for yourself and your family, right? And the only way you do that is by taking it serious, right? So for those of you guys that are here on Sundays, right, you could be doing a whole lot of other things, right? You could be getting loaded, could be just doing a whole lot of things outside of sharpening your mind, getting prepared for the week, and getting ready to capitalize on new opportunities. So for those of you guys that aren't here locked in on Sunday, you're already taking the first step to being a successful individual in these markets. So again, this year you absolutely want to lock in. This is not another year to goof off. You absolutely want to take it serious. Things are changing quick, and you want to be ahead of the curve and be able to provide this income and have this skill set for yourself and your family, right? So with that in mind, let's go ahead and get into it. And like I said, I'm here to help you guys every step of the way. In our free Discord, we're also giving educational value every single day. Particularly, one thing I want to go into, Wednesday through Friday last week, AM session, relatively difficult sessions. The good thing is those things are predictable. And one of the reasons why I touch on that, right? It's not sexy, it's not flashy, but if you really look at your trading data and you look at those blow up days, there's consistent characteristics in those blow up days that are causing you to not be consistently profitable. And I'm willing to bet that if you learn how to identify those days, if you learn how to understand when it is low probability and you actually know how to read it, naturally those days aren't going to put you in a severe drawdown. You're not going to give back all your gains because you're knowing what you're looking for and you know how to anticipate those days. That was one of the biggest things that allowed me to overcome break even to consistently profitable, was being able to identify those really difficult days. I'm not going to go into that too much here, but it's something that is an absolute game changer, and it's things we're giving away for free. So things I want you to be mindful of. Those resources are available in our free Discord. So if you did have some difficulty Wednesday through Friday, very difficult morning sessions, and I want you guys to know why, and more importantly, how you can avoid that in the future. So with that, let's get back to the regularly scheduled programming. Let's get into US dollar. From there, we'll get into the Treasury bond market, index futures, and maybe touch on a couple other markets, and we'll keep it moving from there. Clear, happy Sunday. Let's make it a great one. Absolutely. Unicorn Queen, happy Sunday. Glad to have you. Howie, good day. Frank, happy Sunday. Ann, glad to have you. Kevin, happy Sunday, brother. Hope you're doing good. Michael, hello, hello. CM, happy Sunday. Glad to have you guys. All right, let's get down to the business here today. So looking at the monthly chart here for US dollar, we've been calling this market higher, no surprise, and monthly candles open low, high closed, and expecting that on the monthly chart. Very straightforward. This imbalance here was our draw on liquidity, right? Because again, market moves to two things, liquidity and efficiency. The liquidity we were targeting was smoked. So above that, what do we have? Inefficiency. We've not traded through that. I've gave you guys, I think not in the last one, but 2 weeks ago, I gave you guys my long-term perspective. I broke down the yearly chart, the 6-month chart, 3-month chart, and gave you guys a lot of details as to how you're able to have long-term perspective on the markets. Not going to give you guys all that here, but those are all factors that play into the precision and the targets that we're able to show you guys. So monthly fair value gap, reprice to the high of that. I don't expect this to send price lower. I do want to see us continue, and I do think longer term we will see 114 on the US dollar. So looking at the January candle, open low, right? That's the manipulation. High, and then I'm still expecting expansion going into the remainder of this month to the upside. Of course, we do have that confirmed in the Treasury bonds. However, everything is still bullish as of right now. Let's drop down to the weekly. And let me put this gap on here. So I've been watching this gap here for some time. Let's make that blue. So everything's bullish on the weekly chart, top down. We did get a bit of a retracement last week, which is to be expected, right? I mean, look at how much this market's been driving higher. It's reasonable to see it retrace back into the range. That's what we got yesterday. But what I was observing is this weekly gap here that we used as a target, right? We had the equal highs here as a target, these highs here, this swing high, and then above that, what do we have? This weekly imbalance, right? And the market's been doing what? It's been drawing up into that, right? Very simple stuff. Looking at last week, though, after we've seen this hair higher on the US dollar, it's reasonable to see it retrace back into the range. What did it do? It opened, dropped down, we hit the midpoint of that weekly gap, but the bodies are staying in the upper portion. So this is indicating to me that the market is still bullish. This gap here being left open, being treated as a measuring gap, gives me even further confidence to look for this high here at the 114 for US dollar long term, right? It's still going to take obviously weeks to get there. I'm not saying it's going to get there next week. I'm just saying that's the long-term draw, right? Just like we use this weekly fair value gap here for really the past few months, and you can just see the market just grinding up into it, right? That's what we use higher time frame analysis for. And if you frame the bulk of your lower time frame trades in line with this higher time frame analysis, that's where you're going to get your most explosive trades, the one-sided runs that you get in and they just quickly run to your targets. That's going to be in line with institutional order flow. What does that even mean? Institutions, liquidity providers, and large funds make up the bulk of the volume in the market. They're positioning themselves on monthly, weekly, daily charts. So if you understand where those three timeframes are going, that's going to set the framework for your long-term macro perspective. And if you trade in line with that intraday, you're going to see a whole new level of precision come into your trading, right? So get off those 15, 5, 1 minute charts, study your higher time frame charts, then look at your lower time frame within the context of the higher time frame. If you're new, that's a little technical, but they are things you can learn over time. For those of you guys that are a bit more experienced, you know exactly what I'm saying, and you will notice that's all the difference that it's going to make in your trading when you start trading in line with higher time frame institutional order flow. All right, working down into our daily charts. Ian, my man Dylan. Yes, sir. Glad to have you, Ian. RJ locked and loaded. Absolutely. Good evening from UK. Glad to have you, Jedi. All right, so daily chart, we're seeing continuous bullish order flow here. Nothing's changed my perspective on US dollar. We're still going much higher. Like I said last week, though, we did get a retracement into the range, which is reasonable, right? Because we've seen crazy move higher on the US dollar, just going up. So we did get a retracement back down into this range. What I was watching for order flow to remain bullish was this gap here and this down close candle. You'll see we traded into it, found support. So we're still looking for higher prices on US dollar. The draw going into this week will be the rejection block, these smooth bodies here. Through that, we have the midpoint of this wick here. And then through that, we have this swing high here long term that I'll be looking for as the draw going into this week. As long as we stay above these two down close candles here, institutional order flow remains bullish. I'm not looking at equal lows. I'm not looking for sell side because the market is in a buy program, which simply means it's going to be offered higher regardless of who sells it. What happens, the market's going to be offered higher unless, of course, manual intervention comes in. Something crazy happens, right? We're in that season. So barring anything crazy happening, I'm still looking for higher prices on the US dollar. And I'll go into a little detail of that, right? Like why these down close candles, right? Because then that would be three levels. We have these two volume imbalances here, which actually make up one PD array. We have the fair value gap and the order block here, these two down close candles. If we lose that to the downside, I turn bearish. So why have I been able to constantly call this market higher for you guys this whole run? It's because of this rule I just explained to you guys. As long as three levels continue to be respected, or three key levels rather, continue to be respected, everything is bullish on the market, right? So same thing here. On this retracement, I'm not freaking out and thinking, oh man, my bias is wrong. Study the order flow. We have a fair value gap. We have a down close candle, and we have this fair value gap here, right? Do we lose those three levels? We don't, right? And then from there, we keep trading higher. So as long as the market continues to find support at these key discount levels, market's going to continue trading higher. That's how you trust your setups. That's how you let the analysis play out and not freak out on every little retracement. You have to know what you're looking at. All right, moving right along on the hourly chart. Let's go up to a 4-hour. So we have a dealing range from this low to this high. Market dropped down into a discount market here. Market reaccumulating, trading higher. So we're looking for higher prices to continue from here going into the new week. So that's the business for US dollar. I already know I'm going to get asked, so let me just touch on it here real quick. Euro, we're still looking for lower euro. And we're still looking for lower pound. If you guys recall what I told you guys, pound is going to be weaker than the euro because it's a six sister. Euro has already booked its price below all these lows here and into this imbalance here. Pound is lagging. It's behind euro. So this is the six sister concept that's going to look to catch up to the euro and then look at how much more energetic it's been the last 2 to 3 weeks. Let's go put them up here. And this applies to all asset classes, right? It doesn't just apply to foreign currency. You can see euro's still been dropping, right? But which one's been accelerating a lot more aggressively? Clearly the pound. And the reason for that is that six sister concept. Again, euro's already booked these lows here. Pound will look to catch up and attack those same levels of liquidity and then price in market symmetry. That's essentially what the six sister concept is taking advantage of, market symmetry, because we expect lower low in euro. We want to see a lower low in the pound. If that's not the case and the markets are bearish, then it's going to look to catch up. And that's how you can employ the six sister concept. That's why we're seeing heavier price action on the euro. But we're still looking for lower prices. Nothing's changed. We have these equal lows here and here. And that's what I expect that's what I expect pound to drop down into. A little rusty on the Forex names. It's been a little while. All right, that's it on... Yeah, and then that's confirmed with euro pound. Dollar CAD still bullish, so still looking for higher dollar versus the Canadian dollar, or US dollar versus the Canadian dollar. New Zealand versus US dollar still looking for lower prices. So we're still seeing risk off, in my opinion, which is higher dollar, lower foreign currency. All right, transitioning over to bonds, right? To confirm this, let's go up to a monthly chart. So monthly chart for treasuries, we're still looking for lower treasuries based off the weekly chart. We did see a little retracement, but that's because we've reached several downside targets. Like if we look at the, I believe ZF's 10-year. Let me double check that. No, 5-year, sorry. So you see the 5-year notes have already reached their lows. 10-year and the 30-year still have not. So still looking for lower prices. If we go to the monthly chart, we're still heavily bearish. And I think that's going to be what's going to facilitate higher prices in the US dollar. So of course, to confirm what we're looking at in the DXY or the DXY, we do want to see lower treasuries. So dropping down to the monthly chart, we have this institutional order flow entry drill here, which is this fair value gap partial trade into it. Break down this up close candle. I want to see that send price lower for us to remain bearish. If we get through that up close candle, then we're likely going to see a deeper retracement into these fair value gaps. And then I'll have to assess how we trade there. And the market's going to tell us everything we need to know, knowing how to read market structure and knowing how to read institutional order flow. So that's what I'm looking at right now. I want to see this up close candle send us lower. If we get through that though, then we'll look for the market to trade into these imbalances. And then from there, we'll have to assess where we're going. And of course, since I'll be here with you guys every Sunday, I will be keeping you guys ahead of the curve here every step of the way. Moving right along, well, let's go into the daily chart first. Daily with you guys. All right, so we traded back into all this old order flow here. So I do want to see this balanced price range here, keep price at bay. But again, if we get through that, then we'll likely see a deeper retracement into this range here. And then we could look for these highs to be taken out if we start to show speed through this range here. All right, perfect. Moving right along to indices. Like I said, looking to keep this one short and sweet. So with what we're seeing right now for index futures, we saw open dropping down below the monthly opening price. and then we found support inside this down close candle. So I'm thinking we could see a bullish last 2 weeks of January, trading into new all-time highs potentially. That's what I'm looking at. We'll have to see what we have going into this week, and then from there I'll be able to give you guys more clarity for the remainder of the year after we have this week in price action. But for right now, looking at the monthly candle, we see open, drop down. This could be the manipulation portion of the monthly range, and now we're seeing distribution to the upside. That's what I'm favoring right now, but again, we'll have to measure that in the lower time frame and have that analysis confirmed to us. But like I said, after this week, that'll give me much more clarity for long-term analysis. All right, so looking at the 2-week chart here, start with S&P here. Down close candle still being respected by the bodies here. So we are seeing wicks trading through that, but the bodies are respecting this down close candle or bullish order block. Looking at the NASDAQ, we had this down close candle here, which is a bullish order block and a breaker here. Market trades down into it, hits that opening price, rejecting higher. So I am looking for higher prices in stock indices based off what we're seeing here. And then Dow took out these lows, quickly rejecting these lows to the upside. If we are going to be bullish, I would want to see Dow aggressively trade through this imbalance here. All right, weekly time frame, strong close last week, closing above this last down close candle here. So that's important. As long as we stay above this down close candle now, I will be looking for higher prices on the weekly chart, looking for potentially new all-time highs here in the next 2 to 3 weeks. And then lastly, the daily chart. All right, so they ended up leaving these equal lows here. I was initially looking for those lows here last week. My team was as well. I'll go into how we were able to pivot. It's just a simple understanding of market structure and order flow, and I'll get into the lower time frames and what allowed us to not look for higher prices. As I think my man Tommy made a nice write-up in the Discord community channel, and the main essence of the message, the main lesson there was how to be flexible in your analysis, right? Because yes, we can see these obvious equal lows here where fund level stops would be, right? And it's reasonable to see it when I trade into that. But we can't be overly biased and demand that the market does exactly what we want to see it do. Because every single day with every single candle that prints, new information is being presented. So you want to be able to take in that information objectively and not impose your will, right? And that was something that I'm pretty sure we all struggled with early on in our trading journey. We have something we're looking for and we want to see that happen, and we impose that will on the market. You'll eventually learn that that is not the right way to do it, because the market is a living, breathing organism, right? So it is dynamic, it adjusts, it adapts, and you have to be able to adjust and adapt with it as you get new information. So I'll show you guys what we're looking at on the hourly chart, give you guys some insights as to what allowed us to pivot. But I know those equal lows are there, but as of right now, I'm not looking for those lows because what we're seeing in the technicals is bullish. If that changes, we'll keep you guys updated, let you know what we're looking for. But as of right now, we are looking for higher prices in the equity markets. So now with that, I want to transition just into the NASDAQ now. Let's go back down into the daily chart. All right, so we dropped down. We traded below the bodies here. So we did trade into the rejection block, but we did not clean out the lowest low, but we did trade into the rejection block, right? That's enough to run the majority of the liquidity that's in that. So I do look at a run below rejection block, very similar to a run on liquidity. Yes, these lows are still equal. Will they use them at a later time? I'm sure of it, but as of right now, I'm not looking for these levels. Why? This fair value gap here was indication number one that the technicals were shifting, because look at how the market on CPI Wednesday displaced above it and closed above it. That's not bearish, right? Market trades down, uses it as support. This becomes what? An inversion fair value gap, right? You can see the market drops down into it, uses it as support, makes the low of the day on Friday. Market rips higher. This fair value gap here closed above. So we're seeing strength on the NASDAQ as of right now. If this fair value gap here remains open, I would want to see that treated as a breakaway gap. And then we'll see an energetic run to these highs here, here, and then eventually here if we start to accelerate and get energy through these highs. So what would tell me we're going to be bullish long term? I would want to see speed above this high here. So this high here, if we start displacing through that, then we get energy through that high, then we'll likely get into this high here and all-time highs relatively easily. And then once we get there, of course, we'll have to play it by ear and see what they want to give us there. So let's get into the lower time frames. I want to show you guys how we were able to pivot last week. So you guys can see order flow was clearly bearish on the hourly chart as well as the daily chart here. But then what on CPI allowed us to shift? Going into CPI, it was a gamble, right? Because if we look at the market structure here, there's equal highs and equal lows. That's not really something I'm interested in gambling ahead of. So here, it's uncertain. But what allowed us after CPI to pivot and know what we were looking for? Let's get into that. Let's take off market replay. We see a displacement higher, right? So how do we trade above these highs here? Do we just trade above them, reject, and break back down and trade into these lows? We don't, right? It displaces through it with a fair value gap. So once I saw that, that then allowed me to look for these relatively equal highs here, right? So these relatively equal highs here were the draw on liquidity. Market traded up into that, and that facilitated a nice long setup Wednesday afternoon for me into these equal highs because we were able to pivot, right? So I don't want you guys to look at the analysis we share on Sundays or the weekly outlook and then think, oh man, it must have been a bad week because it went in the opposing direction of what we were looking for. When you know how to read order flow, you know how to read market structure, it allows you to pivot and look for what the market's going to do, not what we want to see. Huge paradigm shift. So just because, let me zoom out, these lows here, and here, just because they're relatively equal, that doesn't mean anything. I need to have that confirmed with market structure and institutional order flow. Here we got what? A displacement higher, trading through these highs. And then we did what? We left this gap open. So that allowed me to take down a monster trade in the PM session on Wednesday using the 21,450 level here because I knew what I was looking for. The market communicated, things shifted, we displaced higher, and then look at this imbalance here, left it open. So when I say order flow, when I say market structure, these are the details that allow you to know what you're looking for and trust it and actually allow you to pivot and not be stuck in, oh man, there's equal lows, it has to go lower, it has to go lower. And the market's communicating to you, it's bullish. So we left this gap open here, clear bullish order flow. The market retraces into this range from this low to this high. That's our dealing range on this time frame. Market drops down into a short-term discount. And then we see what? Displacement higher to the upside, confirming what? The institutional order flow is bullish. And then that allowed us to look for higher prices on Friday. Very interesting. They priced in the entire daily range pre-market, which was interesting. And then they just held it for the rest of the day. But these are the insights that allow you to pivot and know what you're looking for, right? So we displaced higher here, left this gap open. That's extremely bullish. You don't want to short that. Same thing here, right? We displace higher, create a fair value gap. It does what? Trades down into it, uses it as support, rallies higher, but leaves a bulk of it open, or leaves the bulk of it open rather. Communicating that we're bullish, we're looking for higher prices. So this is how you avoid getting your face ripped off and shorting a market that's just grinding higher. You have to know how to read market structure and read order flow, because if you don't, you're going to have a really difficult time forcing a bias and really not even knowing what you're looking for. I don't want that for any of you guys, which is why I took the time to explain this, keep you guys ahead of the curve. So these are insights that allow you to pivot, allow you to know what you're looking for. So again, you're not stuck in a bias and trying to short a market that's clearly telling you it's bullish. So looking at let's look at a 4-hour chart. So this 4-hour fair value gap, we traded into it, used it as support. As long as we remain above this 4-hour imbalance here, I'm looking for higher prices into this buy side here, and back here. And I would want to see this act as like a market maker buy model. Like how we left this gap open here, that's a nice breakaway gap. And I would want to see speed to the upside if we're going to remain bullish and continue seeing higher prices, right? So with that, guys, that is the business for today. I will go ahead and take a couple questions before I get going. Or any concerns you guys may have. Let me go and take a look. Jedi, with the U.S. expected to make a strong economic bounce under new management, what would prevent indices from trading higher under the same idea of a stronger economy? That's a phenomenal question. And I want to answer it. I want to answer it well. So let's All right. So check this out, guys. This is probably way more than you even asked for, but it's fine. I want you guys to understand it. So I get this question all the time. Dylan, stock market is bullish because the economy is doing better. The fact of the matter is that could not be further from the truth. If you are looking at the mainstream media, it's full of manipulation, misdirection, and just flat out lies. The only reason the economy is doing better by the public perspective is because if we look at the debt clock, the debt is going higher, right? So what's happening there, right? Really think about this. So currency that's worth nothing is being printed and given to people. So nothing is being produced more of. We're just creating more debt to keep the system going. So what you're not told is if this were to stop, if we were to stop increasing our debt by trillions of dollars every year, the system would stop. We would have what happened in 2008. And what happened in 2008? 2008 was a liquidity crisis. There wasn't enough liquidity to keep the system going, so it locked up. How did we get through that? Nothing changed. The economy didn't miraculously get better from 2008. They just started what's called quantitative easing. What is quantitative easing? Quantitative easing is easy, fast money. The Federal Reserve, they type on their computer, their little magic keyboard. Here's billions, trillions of dollars, and they just print it into thin air. So why do you think inflation has been going up the past 5, 10, 15 years? Because they're just printing money at a pace that's never been seen before. Every president has borrowed more money than all the previous presidents combined, right? So I'm not Democrat, Republican, not here to have any of that conversation, but if you look at Obama, he printed more than every president before him. Trump printed more than Obama. Biden printed more than Trump. Trump's about to print more than Biden. Because what they don't tell you is they can't stop. The debt can't ever be paid off. So, saying that to say, it has to hyperinflate. Inflation is going to continue. So I'm saying that to say, now going into the debt to GDP ratio, our debt is going higher and the GDP is growing lower. So America's not producing anything. Our gross domestic product is not going higher. All we're doing is inflating our debt. So the illusion to most people is that as the stock market goes higher, well, the economy must be doing better. But that couldn't be further from the truth. The economy is actually going lower. Like if you look at our GDP, what we're making, every metric to track how well the economy is doing. Right, like if you look at here's another one I look at. If you look at the money velocity, the money velocity has been cratering. What is money velocity? Money velocity is the speed at which money moves through an economy. For an economy to be doing well, money velocity has to be going up. So that means transactions are happening. So money velocity is cratering since 2000, and then 2008, we really started trading lower. So the illusion has been since 2008 that because the stock market's going higher, that the economy is magically doing well. But if you know what you're looking at, you actually understand how to analyze an economy, looking at the debt to GDP ratio. If you look at money velocity, it's actually going lower. But the manipulation, the misdirection is stock market goes higher, everything's going up. What do we know about the markets? It's controlled by AI. It's rigged. So they're rigging the markets. They're sending it higher to give the average folks, people that don't know any better, oh, rah, 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 the economy's doing better because the stock market goes up. But all they're really doing is ballooning the debt. So as the debt goes up, the money loses value, everything goes up. Stock market goes up, commodities go up, housing prices go up, Bitcoin goes up, gold goes up. So why do you think everything's going higher? It's not because it has more value. It's because the currency is being devalued at a very fast pace. So saying all that to say, going back to our lovely charts here, why does the stock market just go vertical? Because they're just printing more debt. So the market has no choice but to go higher because think about it like this. For them to create this debt, they have to lower interest rates. If they lower interest rates, that makes naturally a risk on market environment. So money is essentially forced to go into the stock market because money can't get a yield in bonds. Money can't get a yield holding the US dollar. So what it does is it forces a risk on scenario. So all the cash that would be going into bonds, would be going into other assets, is forced into the stock market because interest rates are being artificially suppressed. So when you see a president calling for lower interest rates, a weaker dollar, all that's going to do is push the stock market higher, but it's going to be at the expense of your dollars that are going to be lower in value because of the inflation that we're seeing. So there's economics 101. That's what you'd pay hundreds of thousands of dollars for some bullshit economics course in the university. And look, you just got it here in 8 minutes here on YouTube live stream. Hope you guys enjoyed it. So that was the insight on the economy. The stock market can go higher and the economy can actually get worse, right? So if you know what you're looking at, you're not going to fall victim to that misdirection. You know how to play the game. The markets are a casino. So if the market's going higher, then we trade that. But I'm not looking at it as something that's related to the economy. Great question. Kingsley, what's up, Dylan? What's going on, brother? I'm doing good, my man. I'm doing good. So as far as the economic bounce, the market can absolutely keep going higher. No doubt. No doubt. So dollar and index is decoupling again. That's what I'm seeing, right? If dollar continues to trade higher, then we will see stock indices continue higher as well. USD CAD. I did take a look at USD CAD. We're looking at higher prices for dollar CAD. Just have to go to the earlier part of the presentation when I talked about it in more detail. But because US dollar is bullish, I'm seeing the same thing in Canadian dollar. We just accumulated inside this fair value gap here. And now we're looking for higher prices for Canadian dollar. Eslam, can you take a look at the crypto market? Yeah, I was looking at the crypto market here for the community. I was getting some questions on XRP and whatnot. So when we were below this up close candle, I was giving this to the community that we're looking for higher prices. So we wanted to see it trade above this up close candle, use it as support, rally higher. So if the guys in the community, many of you guys that are in our community actually invest in crypto, trade it. So we're giving you guys here the winning lottery numbers beforehand, as usual. But we're still looking for higher prices on Bitcoin. We dropped down, we cleared out these stops, right? So stop losses have been taken here. Before we see a significant run in price action, expect a run in the opposing direction. Market drops into sell side, big run higher, easy money. This stuff happens all the time. So once we saw this here, I was predicting that we'd get above this, not treat it as a bearish order block, but instead as a bullish breaker. And you can see we dropped down into it using it as support. And I do want to see that continue going forward. So there's my opinion on the crypto market, right? Bitcoin higher, that's going to drag everything up with it. Bitcoin's the mommy, right? Unicorn Queen, each week I get better and better with market analysis. Thanks, Dylan and team. Our absolute pleasure, Unicorn. Appreciate your feedback and looking forward to seeing you crushing it. I do see, I don't have much time to respond. Very busy day today, but I do see the accountability in the Discord chat, sharing your trades, what you're doing, your journey, and it's really helpful to more than you think. So I really appreciate it. And it takes a lot of courage to do that. But again, that hard work will absolutely be rewarded. Alessandro, strong dollar shouldn't be a signal of weak NASDAQ. Yeah, on a basic level, higher dollar, lower NQ, but they can be decoupled short term. Long term, eventually strengthened dollar will cause indices to bend the knee, but they can move in tandem and be desynchronized, for the lack of a better word, in the short term. So we can see higher NASDAQ and higher dollar. So it's just a matter of weighing out what the charts are telling you, right? That's one of the helpful things of knowing how to read price charts is you can just tell what the market's telling you. If it's going higher, it's going to communicate that to you. And both of them can go higher at the same time. Abraham also streamed as usual. Have a great week, brother. Will do, Abraham. You as well, my man. Dollar and NASDAQ are typically non-correlated. One goes up, one goes down. Absolutely. Absolutely. Alistair, so if the debt ceiling raised is bad for the US? Yeah, absolutely. Because if they raise the debt ceiling, what are they doing? They're creating more debt. More debt destroys the middle class. Because the middle class has what? They have bank accounts full of money. Those bank accounts full of money, if you have $50,000 and you had $50,000 from, let's say, 30 years ago, that 50K 30 years ago got you a car, got you a home. 50K now, shit, I mean, you spend that in 2 to 3 months. So it's horrible for the average American person. The rich, the ultra 1% that own all the stocks, own real estate, own all the assets, gold, for them it's great, right? Because as the dollar goes down, their assets appreciate in value. So it's just knowing how to play the game, things they don't teach you in school. Daniel, if bonds have a deep retracement, would dollar also retrace? Yeah, that's a great question. Great point, Daniel. Absolutely. So if we do start to see a deeper retracement in bonds, then that would absolutely potentially cause weakness in the US dollar, which then would accelerate higher index futures. Absolutely. And that's why those things are important to monitor also throughout the week as well, right? So I don't just look at this on Sunday and forget about it. I do look at these factors periodically throughout the week because, like you said, mentioned there, it's critical information to have in your trading. Absolutely. Passive investing from 401ks and IRAs plays a role as well. Absolutely. Yeah. Lots of money flowing into the US stock market. Yeah. A lot of folks have their wealth tied up in the stock market. Most definitely. Millions of people push 5, 10, 15% of their salary into the market every payday. Yeah, most definitely. Most definitely. And that was an amazing explanation, Dylan. The pennies finally dropped for me. Love to hear it. Love to hear it. It's amazing when you hear these things explained in a simple way, right? But I think what they try to do is they try to make the financial system sound so complicated, so complex, so average folks don't understand it. And then they're manipulated by a stronger stock market. Oh, everything must be good, you know, and it's easy to be manipulated by that. But once you know what to look for. You can't be manipulated. You can't be controlled because you know what you're looking at and you know how to think for yourself. Most important thing, knowing how to think for yourself. Thanks, bro. My pleasure. Reaper, hello, Dylan. Hello, hello. Omar, thank you, Dylan, for your insight. Yeah, my pleasure. Jedi, ask the right questions, I suppose. I do operate on the school of thought that the markets are controlled algorithmically, and I thank you for taking time to answer my question. Yeah, great question, man. Great question. Kingsley, I am who I am in trading because of you. Always grateful to you, brother. My absolute pleasure, brother. Love to see you killing it. Appreciate you coming back here to let me know how you're doing. I see what you're doing. Big things coming for you. Keep up the awesome work, man. Yo, guys, don't forget to give the stream a like. Absolutely, please do, right? If you're getting some value, we're helping you out. Please do give the stream a like. I greatly appreciate that. What are your thoughts on Trump coin? Good question, Abraham. So I have not been looking too much at Trump coin. What is it? Is it Trump USDT? Is this the right one? No, that's not the right one. I don't even know how to pull it up. What's the ticker for it? This one? Yeah, this must be it, huh? Is this the right one? I believe this is it. I'm not sure though. I don't look too much into it. I stick with what I know. That's trading index futures, and I usually don't chase new shiny objects. So can there be a lot of money to be made in crypto? Sure. What do I think about it? I'm gonna keep doing what works for me, what's making myself, my business, my team money, and that is trading what we know. So I'm not going into new things. It's not that I don't want to learn something new, but it's the fact that if it ain't broke, don't fix it, right? If you're making money with what you're doing, then I'm not interested in really chasing new shiny objects. What I've got works. So focus is very important in this day and age, right? A lot of information, a lot of things out there, but focus is the true value. That's it, I believe. Yeah, I'm on the right one. Yeah, so we're looking at higher prices, right? We had this consolidation here, this imbalance, this last down close candle, found support, trading higher, all these breakaway gaps on the upside. Everything looks bullish on old Trumpster's coin. So looking for higher prices. Meme coins are cooked. Wouldn't touch them. Yeah, it's not something I know really well. I talk about what I know. If I don't know it, I'm probably not going to talk too much about it. But I do know how to read order flow, right? So if you know how to read order flow, market structure, everything on this chart looks bullish to me. Nothing I'm trading, nothing I'm touching, but if you know how to read price action, then you can have at it. Yeah. All right, guys. Appreciate your time here. See one or two more questions, but I do got to get going here. I've got some things to get handled here today. Appreciate you guys joining us. Hope this one was insightful. I know I'm shutting things off a bit shorter here, but like I said, rest of the year we will be on Sunday. Any questions you guys have, things you guys want us to take a look at, be sure to bring them on Sundays, and we'll be more than happy to get to your guys' questions. With that, take care. Have a wonderful 3-day weekend. It is Martin Luther King Day on Monday in the U.S., so that will be a bank holiday. So enjoy the time off, enjoy the weekend, and we will be back to business next week. Community, I'll see you guys in live trading on Wednesday, and it'll be lovely as always. See you guys then. Take care.